Well, it's about 80 ounces now it takes to buy 1 ounce of gold. That's man's ratio. God's ratio, it comes out of the earth at 9.5 or 10 to 1. Which one's right and which one's wrong? Is God's ratio wrong? No, man's ratio is wrong. At 80 to 1, silver is grossly undervalued, and it should be 15 or 20 to 1, which says that silver should outperform gold 3 or 4 to 1 from this level. Now, silver is a completely different market than gold. Gold is basically money. Silver, yes, it's money. And your next stop will probably be 60, 62 in very short order. I think over the next 6 months, I don't hardly ever go out on a limb like this, but I think $100 an ounce. I think within the next 6 months, it's an easy call.
Something massive is happening in the precious metals market, and almost nobody is paying attention. For decades, the gold-to-silver ratio has acted like a warning signal before major financial turning points. But today, that signal isn't blinking. It's flashing red. The ratio is sitting near 80 to 1, one of the most extreme distortions in modern history. And according to analyst Bill Holter, this gap isn't just unusual. It's the clearest sign yet that the financial system is reaching its breaking point. Holter argues that silver comes out of the earth at roughly 10 to 1 compared to gold. That means the current 80 to 1 ratio is not just mispriced, it's mathematically unsustainable. One of these metals is dramatically undervalued, and it isn't gold. Silver is being suppressed, overlooked, and misunderstood at the exact moment when global credit, currencies, and geopolitics are all beginning to fracture. If Holter is right, the setup forming right now may trigger one of the most explosive silver moves of our lifetime. So today, we break down exactly what he sees and what it means for anyone holding gold or silver.
I would say start off buying silver if you got a fair amount of money, add gold to it. But learning how to invest in the stock market, the bond market, the traditional markets, right now, why waste your time? Because that system is going to end. That system will stop and it will reboot. And yeah, you're going to have to learn along the way. But the reason you own gold and silver is because those are the only two monies on the planet that cannot bankrupt in a world that's bankrupting. Big buying the last, 3, 4, 5 years. And then this year, you had, when we got higher prices, you've had a lot of sellers, legacy sellers, and you can see that for sure within the coin market. Pretty much most silver products are bid at spot or slightly, eagles are bid over spot. But junk silver, which was really the only form that Americans could buy back in the late 70s and early 80s, junk silver, the bid on that now is like $4 under spot. You can buy junk. It's the cheapest form to buy. It's the best form to own. But what's happened is a lot of the people who bought back at $40, $50 back in 1979, 1980, those have come to market. Those people, a lot of those have sold. And what the dealers are doing, or what the wholesalers are doing, is they're taking that silver in $3, $4 under spot, and they're sending it to refiners, and they're picking up an extra 6 to 8% commission or VIG or whatever you want to call it, because that junk is being melted down. Now, this is a temporary situation because there's only so much junk that can be sold, and I think that's slowing down already. But what this means is going forward, there's way less junk available than there was just 6 months or a year ago because so much of it has been melted down. In the future, in my opinion, junk silver will be the most expensive form of silver in the United States, including silver eagles, which right now is by far the most expensive form of silver. So what I'm telling you is if you're buying silver, buy junk. It's the best form to own, and it's the cheapest form right now to purchase. Gold does not go up. Gold does nothing. Gold is the measuring stick. What does move is the dollar. The value of the dollar has dropped, and thus it takes more dollars to buy the same 1 ounce of gold. Gold and silver, they are money. And this is about money. It's not about use. It's not about production. It's not about consumption. When this goes down, it is a credit event. It's the end of an empire. The United States is so indebted that they can never pay back what they owe in current dollars. And The dollar is going to crack, credit is going to crack, and when credit cracks, the real economy stops because everything runs on credit.
Bill Holter starts with what he believes is the biggest red flag in the entire metals market, the 80-to-1 gold to silver ratio. In nature, the metals are mined at roughly 9 to 10 ounces of silver for every ounce of gold. Holter calls this God's ratio because it reflects natural geology, not Wall Street engineering. When the market is pricing silver at an 80-to-1 discount, he says you're looking at one of the most extreme undervaluations in modern financial history. Correcting back toward even 20-to-1 would send silver soaring, outperforming gold 3 to 4 times. Holter also emphasizes that silver is not just monetary metal. It's one of the most important industrial metals on the planet. It's essential for solar panels, electronics, medical technology, and military systems. This twin demand, monetary and industrial, is tightening supply at the same time the financial system is weakening. He pushes further, saying the next stop for silver could be $60 to $62, and a run toward $100 per ounce within 6 months is an easy call. He rarely makes bold predictions, which makes this statement even more striking. Now, layering that with what's happening today in the real world makes his warning even sharper. Silver prices have surged this year, with some analyses showing over 40% gains and the strongest rally since 2011. The gold-to-silver ratio is still historically high in the 80 to 90-plus range, making silver look cheap even after its recent rise. Industrial demand, especially from the solar industry, is hitting new records, while global silver supply has been in deficit for years. This is the first time in modern history where both structural demand and a financial reset narrative are hitting simultaneously. Holter also highlights a supply dynamic most investors are missing: junk silver coins. Dealers are buying these coins below spot, melting them down, and sending them to refiners. That means a huge amount of circulating junk silver is disappearing permanently. In a future where physical metal becomes scarce, he believes junk silver will end up carrying the highest premium of any U.S. silver product, even more than silver eagles. But the most critical part of Holter's message is about the credit system. He states plainly, gold doesn't go up, the dollar goes down. Gold is the measuring stick. When the dollar weakens, gold looks like it rises. But in reality, the currency is collapsing. He warns that the global financial system is entering a phase where credit markets crack, debt becomes unpayable in real dollars, and trust in fiat systems collapses. When the U.S. froze over $300 billion of Russia's Treasury reserves, central banks worldwide realized their holdings could be confiscated. Since then, sovereign nations have been dumping treasuries and loading up on physical gold as protection against geopolitical risk and dollar weaponization. Countries holding mostly treasuries are exposed to disaster. Those with gold are insulated. Silver, in Holter's view, becomes the leverage play on that shift, the one metal capable of explosive upside during a monetary reset. His message to investors is crystal clear. Silver is the opportunity, gold is the insurance, fiat is the risk, and the clock is already ticking.
Commandeered $300+ billion of Russian U.S. Treasury holdings. And the rest of the world looked at that and said, hey, if they can steal $300+ billion from Russia, they can stomp us out like a spider. Central banks, sovereign treasuries, they decided they don't want treasuries anymore because those can be taken away. Just like CBDC, they will be able to take that from your account. But if you have gold in hand, or if these sovereign central banks and sovereign treasuries, if they've taken capital and bought gold with it and they're storing the gold, they have the wealth. It can't be taken away from them. So plain and simple, the reason gold is where it is now is because the US dollar was weaponized, the SWIFT system was weaponized, and the US stole over $300 billion of U.S. treasuries from Russia. Well, right now, the United States dollar, the treasury bonds, the treasuries represent, 50 to 60% of foreign central bank holdings. So if the dollar cracks, what does that do to the central bank balance sheets? Now, if they have gold on it and the gold has gone up and the dollar's gone down, those countries will be better off than countries I lived in Costa Rica for 5 years, and that the Costa Rican central bank is exclusively U.S. Treasuries. So what's going to happen in a country where all of a sudden their central bank goes belly up? It's going to be a disaster. So it depends on the country, and it depends on the balance sheet of that specific country. There was always a crash, always a big panic, and then all of a sudden stocks stop dropping and they start going up like a rocket ship, but only half as fast as the currency loses value, and that's based on their local currency. I mean, you could look at, I think it was what, 2 years ago, the Zimbabwe stock market was the best one in the entire world in Zimbabwe currency, but not in dollars or not in gold. Gold is the measuring stick. That the dollar is going to be in its same form a decade from now, and I assume it will not. There's two ways that the dollar is measured. One way that mainstream media measures is it through the USDX index, and that's versus other foreign fiat currencies. That's meaningless. Whether the dollar is stronger or weaker versus the yen, the euro, the pound, that doesn't matter. The true valuation, as I just mentioned in the last question, the true valuation is against gold. And the dollar in the last year has lost what, 35-40% of its value versus the dollar in the last 12 months.
The warning signs are everywhere. The ratios are distorted, supply is tightening, central banks are shifting away from the dollar, and global credit markets are buckling under impossible debt loads. Whether silver hits $60, $100, or much higher, one thing is certain. The window to prepare is closing fast. Gold protects your purchasing power, but silver gives you the leverage when the system resets. Thanks for watching. If this breakdown helped you understand what's really happening behind the scenes, make sure to subscribe, turn on notifications, and share this video with someone who needs to hear this message. We're moving into a time when the right information will be more valuable than ever. And here's your question for today. Do you think silver will return to the natural 10-to-1 ratio, or will the financial system break before that ever happens? Drop your answer below. Your perspective might be exactly what someone else needs to see.